Sold over asking, sold over asking, sold over asking. This is a new trend in the Canadian housing market. Everywhere you look, properties are being sold over asking. What is going on? Is this the future? And if it is, has your salary kept pace with the increase in the home prices? That's what we're going to look at in this video today. But before we look at the salary data, I want to compare some of the housing data with you. How this video was initiated, because I came across this chart that compares the increase in property price in Canada to some of the other major countries from 2000 to 2020. And look at Canada, started to take a leadership position in early 2014 and has maintained that throughout. And look where it ends in 2020. So I wanted to do my own research as well, and I found this really cool interactive tool on the Economist's website. House prices in Canada are up 230% now versus Q1 2000. So you'll see, compare that to the United States, we're up US is up 106%. This is a very cool interactive tool where you can look at other countries as well. But when I compare the Canadian market on a real price challenge, when after inflation, the Canadian price is up 150%. So in just 20 years, the price has gone up 150%. Compare that to the United States, where they're up 37%. And I want to compare that. We'll do some more analysis later in this video. But just based on this chart alone, if I compare the income increases, the house prices against income increase, the Canadian house prices are overvalued by 59% versus the US at 2%. So with the US being up 2%, I figured, okay, let me check if the house price is going crazy bananas. What about income? Has the income increased? Have you seen an increase in salaries at the same percentage as the price of a home? So I went to Statistics Canada's website, and it's a fairly easy and simple tool to use. You put in the country and the geography you're looking at, you put in the time period, and when I scroll down, there's a whole bunch of stats here. The median market income, what the government incorporates as an economic benefit to families, and so forth. But when I come down to median after tax income, I see that it has not changed too much. It was $50,700 median income for Canadians in early 2000, and compare that to now, it's $62,900, which is not a huge percentage increase. I was able to also look at a percentage of 50,700 minus the 62,900. That gives you roughly a 24% increase over the past 20 years, which doesn't even work out to be the same as inflation. So we know that the inflation's a real problem because the salary increases are only keeping up with inflation. The inflation's only been about a 1.1, 1.4, 1.63, 2.3, 1.9. It isn't rising up to double digits, which is good for us. But what's also not working in our favor is the salaries are also not going up. So if I am a young person and I'm looking to buy a property, what do? I am now stuck having to find myself a way to own a property when my income's only going up the same as inflation. This was a nice chart that I found on Global News website that basically highlights some areas and major cities in Canada where how much income do you need to afford a property? You'll look at Vancouver, you need $205,000 to afford a $1.4 million property. And this is from 2019. Just compare that to 2021 and you'll be amazed. Ontario is killing it. Toronto has now crossed $1 million as average home price. So if you're a millennial or a young person starting dreaming of owning your own property, what are you going to do? You'll need at least $150,000 to afford a reasonable property in Ontario. And you'll know that it's not easy right now to buy a property because of the crazy bidding wars as well as sold over asking. And it's literally is a seller's market. So what do? You have some money set aside and you're wondering if now is the time to own your home, or do you just say maybe not? More and more of us are moving away from major cities, and with the pandemic and with employers being focused on the ability to work remotely, if you have that option, maybe you look at other cities. You move away from the greater metropolitan areas and look at other cities where affordability is a bit more reasonable and you can work remotely. Other thing I want to throw at you is look at some of the gains on the stock market. It's very risky, doesn't always work in your favor. But if you are a long term investor and you have some money set aside, if you were to put a 20% down payment, let's say $175,000 off 800,000, a property in the market, and you invested it since 2000, the data that we're looking at for our housing market, and you'll see that some years the market is minus, some year it's positive. But on an average, the market would have given you 7.8, 7.5 to 8%. If you'd put in that money, the $175,000 over 20 years, and just gained 7.68%, that 175 would be worth $768,000. So as a millennial, as a young person, what can you do? You can carve out some savings, put that in a nice index fund that just grows as the market moves up and down. It sort of grows with the market instead of you timing the market. You just let it grow, and maybe look at affordability outside of the major metropolitan areas. And as we saw from our chart earlier, the housing prices do take a dip. They may not collapse as we saw in the US, but in the Canadian side, there may be a dip, and perhaps that would be a time for you to re-jump back in. So you saw in this video that home prices have gone up crazy versus salaries in Canada. And maybe it's an option for you to consider, is investing elsewhere instead of homes, because right now they're at the top of the charts. And when there's a dip, you re-jump back in. But in the interim, we'll do another video on pros and cons of investing in real estate versus the stock market. Happy investing and take care.